Good morning, ladies and gentlemen. Well, the Ristal over the last week went from roughly 0 to -34, which is not surprising given that we had 5 days of negative price trend in risk. I don't consider this to be too important, and I will show you later why. The spreads are all very tightly packed together. And something big could be certainly in the month of March or April will happen. What is important, more important, is that the red line is now coming to a lower bound, much like it did in 2015, 2016, and much like it did in late 2011. That is important for the longer term, and I will show you later why. The movement in the indicator per se I find less important. If we look at the deviations, which to me is more important, you will actually see that the bands are now trending down together. So we are going to have a period, I would bet, of sideways trading that is going to last the best part of at least 3 or 4 weeks before we start making a next move. I would encourage you to have a look at these because they are in different you will see that utilities are now actually trending higher, and you will see that certain ones like XLF are coming very close to support, and XLV is at support. So that is giving you the important sectors of the market to look at. But we'll now look at each individual asset class individually and see why I think that we are in for a period of consolidation for the next few weeks before we make a bigger move. To me, this is the most fascinating chart at the moment. You can see how the spread between the 10-year note and the Bund is being held constant. To me, this is the closest that I can come to proving manipulation in the market. It is absolutely incredible that the spread is remaining in a 10 to 12 basis point range for such a long period of time. It seems to be that the Fed is passing the baton to the ECB, the ECB back to the Fed. It is just incredible that this correlation lasts for such a long time, and while it lasts, it holds the dollar together, it holds asset prices together. A break of this is going to be very, very important, but no break at the moment. And this is the chart that I watch all day, every day for clues as to what is going to happen next. This is a yield chart of the Bund, and we saw the market break higher from the 0.14, 0.15 yield. Then the ECB came in and smacked it all the way down through the 0.7, and now it would not be surprising if we went all the way to -2 basis points. Again, negative yields support the risk assets. What are you going to buy? Basically, it's TINA. There is no alternative. You have to buy risk assets when when you have a negative yield on a 10-year instrument like you do in Germany. It's not negative at the moment, but it could easily go negative next week down to this -2 basis points. And via the Bunds, they are manipulating the yields of this is the 5-year. you can see we're just playing ping pong between the upper and the lower Bollinger Band. It's going to be very difficult to break the 0.235, so 2.35% yield is going to be very difficult to break, and very significant if it does break. If we have a look at the 10-year, here we are, that the equivalent there happens at roughly the 2.55 yield. It is incredible how they're managing to hold the market in such a tight range. To me, it is obvious that at some stage the budget deficit in the States is going to cause a steepening of the yield curve, but that is not something that the market is concentrating at the moment. The market is basically being held together, as I've shown you, by the spread between the Bund and the 10-year note. It is not inconceivable that next week we test this 255 level, and that is a level that I'm very keen to do some option plays, because I think that sooner or later we go back to where we came from, and that is going to be up here around the 275 area. Now, why do I tell you that I don't consider the movement in the risk indicator important in the short term? That is because all the risk spreads, and this is XLP, XLY, which is one of them, but there are hundreds of them, are all in the same position roughly. They are basically stuck between the 200-day moving average and the 50-day moving average, and very small movements are now going to cause the risk dial to actually swing wildly, negatively and positively. Until this resolves and we get a trend, i.e. either the 200-day moving average starts going upwards or continues going downwards, we will get very strong swings, which mean really not a lot in the very short term. You can see how very small price movements here are going to cause very large movements in the indicator. So to me it is this is actually telling me that for the next few weeks prices are going to go sideways and then break one way or the other. I don't have a favorite way, and I will show you on the individual charts of ES and so on that we are at a very, very important juncture. What we have to do is be patient and recognize that we are not going to get a valid signal for the next several weeks. The good thing about the retracement that we suffered last week is actually that it gives us some very important levels. It now has given us the 2775, 2780 level as a very important level on the upside. As soon as we broke through it, we cascaded down almost 2%. And it also shows us that the Bollinger Bands are contracting, indicating to me that we will go sideways for quite a while. We also have the 2675, 2677 level as extremely important. I don't think that that level is going to be broken for quite some time, but also has given us the 2710 to 2715 level as incredibly good support. The market could not break down through it on Friday, however much selling there was, and up we went in the last hour. To me, it is most likely that for the next couple of weeks we trade between this 2710, 2715 and the 2775, 2780 levels, and basically just go sideways like we did here, or at other periods like we did here. Narrower ranges, basically playing ping pong along those levels, before we get a resolution. We were getting very overbought. That has corrected the RSIs. It was a healthy move, but we recognize it. We recognize now the levels. We have the levels, 27.75, 27.80, and at the bottom we have the 26.75, 26.77 level, 100-point range, probably less than 100-point range, but very important, and we will trade probably the next 2 or 3 weeks inside. On a weekly basis, we can see how the market just could not break underneath these moving averages and close just above them. These are now the key support levels. If we enlarge this, we can see the levels very clearly just above 2700, and then we have another moving average here around the 2675 area. It's going to be very difficult to break those. You can see the Bollinger Bands are now going sideways. That will come in, indicating that price action in here, as I've shown you, between, let's call it 2710 and 2780, is going to be the favorite for at least a couple of weeks before the spreads finally decide what the direction of the market is going to be. I would expect a very quiet period for the next couple of weeks. Maybe not quiet in terms of zigzagging, but certainly quiet in terms of net price difference over the course of the next couple of weeks. If we look at what volatility is telling us, it's telling us exactly the same. We had the correction after the compression of the last 2 or 3 weeks. We managed to get up to 18%. We got smacked right back down on Friday. Now the favorite is that we do a U, coming back down towards the 14% area, indicating to me that we will trade this 2780 level again, and basically then go sideways before we decide which way we want to go. To me, it's favorite that we trade the 2780 level again at some stage next week, and that is what volatility is telling me. On a weekly basis of volatility, this is what we're likely to see. We're likely to see a period of up, down, up, down, up, down here below the 1610 area. It is very important that we close below 1610. To me, that indicates we don't have the momentum to go higher. So I expect a period much like we had in the summer of last year, when the market just goes sideways in terms of volatility. That is, to me, an indication of price compression in ES. Exactly what the spreads are telling us, that the 50-day and the 200-day moving average are converging, and prices going either side of them, causing swings in the risk dial, but which are not significant for the long term. The real trend will be established, I would have thought, sometime in April or May, and that's when we will have the sustained price move. I am becoming more and more interested in gold as an asset class, simply because if they're going to manipulate all the bond markets, to me the natural winner in the long term is gold. It's not going to happen yet. We are probably months away from any resolution, but as soon as we start crossing on a weekly close basis this trend line, I think that we have a lot of room to the upside. And I'm not talking about 1400, I'm not talking to 1500, I'm talking a lot higher. What could cause it? Could it be politics in the United States? Yes, it could be. The whole situation at some stage with the manipulation of the price in such tight ranges will break, and I think the natural winner is going to be gold. For gold to start moving, DXY needs to do its thing, and it needs to do its thing on the downside. There are absolutely no indications of it at the moment. It is still held in by 97.54, which is a very important level. We do a few closes above, and chances are that we're going to par. We are holding this channel very well, and we are holding above the 200-day moving average very well. We keep on testing it. We went down to the 95.07 level. We bounced like crazy off it. We have the swing level at 96.50, which is all important, and then finally we have our level here at 93.63, which is written in stone. That will be a very significant level, because if we break that level, that means that we've broken the 200-day moving average, we've broken the 50-day moving average. Those we will be crossing, and then we're going to have a very, very big move to the downside in the dollar. It's not on the horizon as yet, but we have to look at these longer term price points. They are going to be absolutely key in the long term. What it does in the short term, to me, is far less important. I'd much rather be able to enter in size in a trade that I'm confident in, which has fundamental backing, like politics in the States or whatever it happens to be. At the moment it's not there, but what is interesting is that I showed you earlier XLP and XLY, and all the other spreads are much the same. But here in blue you have the 50-day moving average, and in mauve you have the 200-day moving average. You can see how they're all converging all at the same time, all the spreads and the dollar. That means that when we finally get resolution, we're going to have a very powerful trend. Which way it is, I don't know, and it is important. It is not important. What is important is to recognize that we will get a very powerful trend. One last thing I wanted to show you is the Blue Angels. The Blue Angels are now going sideways after a period of correction. We are at the 0.6 times 16 Blue Angel, and we are probably going to do something like we did here in 2015, i.e. go sideways for quite some time, several weeks before we get the decision which way round we're going to go, whether we're going to go up to the times 17 and break it and make new highs towards the 3200 level, or the economy just rolls over and then we go down to and retest the lows. But it's all coming together saying that in the next few weeks it's a period of sideways trading in probably less than 100-point range with low volatility, and the market basically deciding that all decent dips are buys and squeezing very hard. That is all I can see is on the cards over the course of the next few weeks. When you get periods of sideways trading, you get people getting fed up with it and reaching out for yield. This is EEM. I would have thought that any move down towards this 41 level is going to be very well supported. If we can buy 41s, we should probably be able to see 43s again, and that's a decent move, 5%. That is what I'm looking for, and I'm a buyer here at 41. Lastly, I would like to draw your attention to, since it's Brexit week, to something very important, and that is Euro GBP. If we look at it from a weekly point, we see that the 0.8392, I call it 0.84 to 0.83, is going to be a very important level to crack. If it contains the upward sloping 200-day MA, if we do get a positive Brexit resolution next week, which I don't really expect, but it's definitely a possibility. I think we definitely test this area. So if you see the news come out that the Parliament has approved the vote, very low likelihood that is where we're going. Very quickly we will go down to between 83 and 84. If on the other hand more uncertainty persists, I would have thought the 88.30 level is likely to be traded very quickly. And that is going to be the swing. If we get some even more disturbing news, we are probably going to go all the way back up to 90. So if 88.30 gives way, we go all the way up to over 90. I don't expect that to happen either, but stranger things have happened, and therefore I want to draw your attention to it because it's going to be very interesting to trade euro sterling next week. On to the biases for next week. I'm still a strong proponent of yield curve steepening. At some stage the 2s, 10s and the 230s are going to go berserk on the upside. I don't know whether it's going to be via bull steepener or a bear steepener, but I'm quite convinced of it. At the moment we're going sideways, we're doing nothing, but to me that is the long-term trade. That is the one I just do and put to the side. I never look at it. I'm quite happy that it's going to happen at some stage, probably this year. At the moment, basically, this is what I'm saying. If we get to 255 in the 10-year yield with the low volatility that we currently have, some long-term straddles are really warranted. And by long-term I mean 6 month, 9 month. I will go out to something like September or even December if I can, because I'm quite sure that prices are going to be nowhere near that 255 level come December. In the Bund, well, it got to 0.22, and now, as I showed you, it's actually likely to go to negative and drag the 5 and the 10-year towards this 255 level. SPX, I said, major league chop. We broke through 27.75. We did our options. We made some money. And now 27.10 and then maximum 26.77. I don't see this level broken at all. To me, that level is the most important level that we can possibly trade. If we can't even get, I'm sure that we will retest the 27.30s at some stage next week. If that holds, we're going to go all the way straight away up to 27.80 and 75.80 and retest that. If we can't break it, then we'll basically stay in a 20-point range for the rest of the week. If we can, then it's 28.12. I don't expect 28.12 to be broken. I really don't. But if we do, we're going to go to 28.61. There is no way we break 28.61 without several tries and attempts over days and weeks. 28.61, absolutely no way do we break that. As I showed you, volatility, to me, we're still likely to go down to 11.75 at some stage. European equities last week were really the canary in the coal mine, saying we're not going to break very far. You know, the crappiest of the crap did not go down. So to me, we're still likely to see this level. Patience is going to pay off. 11,800 in the DAX. That's where we want to do our put spreads. Nothing has changed in the dollar. And I've given you the levels in the Euro GBP, 83.84. We showed you that 88.30 level that is so important. Above 88.30 we go straight to 90. We will see what happens with Brexit. I suppose that Brexit is going to be another one of those hurdles that the market successfully overcomes and moves higher. To me, it's more likely that at some stage Euro GBP trades 83.84, as I showed you. That's the way I'm positioned, and that's the way I will definitely sell the 90 level, or even something small at 88.30, because it is so unlikely to me that the UK is going to go out without a deal. Thank you very much indeed, and tweet you on Monday.